So we're talking about Procter Gamble here today. They're currently trading a lot lower than their all-time highs, and in this video I'm going to go with their financials and the dividend scorecard. Let's see if this is a buy or not. So we've jumped on the income statement now, and we're looking at metric numero uno, and we're looking at total revenues. So here we have 2016 to year to date TTM, meaning trading 12 months. I am loving it. We've got strong growth year over year, and it is perfect. Next, we look at metric number 2, net income. This is the amount of profit they're making every single year. It's been a bumpy ride for this one, but even in a pandemic, they've had their second best year in the past 5 years. It's good for me. Normalized diluted EPS is next. This shows us the true story, and it's way better than the basic EPS. And this is one of the best I've seen. This is the highest it's ever been in this year, and it's just slow, steady growth since 2016. Brilliant. Income statement is done, now the balance sheet. We go straight in for metric number 4, and that is total equity. What is going on? Total equity is assets minus liabilities, and you want this figure to grow year over year, so it shows the company is growing over time. But this is not the case with these guys. Ever since 2016, it's been going down. Slight rise this year compared to the last 2, but still quite alarming. I'd watch out for that. We've got to look at the debt of the company. Let's see how it is. Now, this isn't the worst one I've seen. They have a lot of debt, but not a scary high amount. And what's good about this is not growing at an alarming rate. It's been just consistent at that 30,000 mark. This year is a lot lower than last year, so maybe they've been prioritizing paying off that debt. Metric number 6 is net debt. Now this is the remaining debt if they pay with all the cash they have on hand. There was a slight jump in 2018, it's just been staying stagnant since then. Not the best story. My favorite statement out of the 3, the cash flow statement. Cash from operations is up first. Now this is positive. Steady growth since 2016, and it's perfect. This year was the highest to date, and I'm liking it. Metric number 8 is levered free cash flow. This metric shows us how much free cash flow they have remaining after paying all their financial obligations. And from a dividend investor standpoint, this is brilliant. They must have had an amazing year in 2017, because it dropped after that, but ever since then, it's been really growing. Nothing to complain about here. Okay, the final metric of this statement. Now we look at the free cash flow per share. This is the icing on the cake for all the other metrics, and this is the metric which is a true indicator of their payout ratio for their dividend payment. And for the past 5 years, it's been growing at a good rate. I like it. Next, we look at the dividend scorecard. We've got a forward yield of 2.47, which is not the highest but not the lowest. Annual payout of $3.16. Payout ratio, which is perfect for me, 55%. That's in that sweet spot, and anything more is a bit alarming. I'd reckon I'd go for companies with less than 70% to be sure. 5-year growth rate of 3.44%. That is rubbish. I hate that. That is basically just a bit above inflation. I want to see those double-digit numbers, and I'm not liking this. This is very slow growth. But they combat that with an amazing track record of 64 years, which is brilliant. They've increased their dividend for 64 long years. Not many companies can say that. If we quickly look at this chart, this shows their growth history from 1989, and it's just a straight line up. I like it. Even though the growth rate for the dividend in the past 5 years has been slow, in the past year, they've raised it by 6%, which could make investors happy. 6% is nearly double the past 5 years previous, which is a very good sign. I want to quickly look at yield on cost. If you invested 5 years ago, you have a yield on cost of 3.87%. After 10 years, you'd have a 4.91% yield on cost, and after 20 years, you'd have a yield on cost of 8.61%. For me, that is way too slow. Way too slow. I want to be in my double digits at least, and that is not for me. Okay guys, that is the video. What do you guys think of Procter & Gamble? I personally don't own them. This might have changed my mind. They've got really good financials. Their payout ratio is low. The growth rate is a bit slow, which is unfortunate, but I might have to rethink this one. I quite like it. If you found value in this video, could you please give it a like and consider subscribing? See you guys in the next one. Cheers.